Hello, investors. Here's a weekly outlook. It's presented to you by 7X Investors. If you like what we're doing here, go ahead and subscribe to our channel. Press the like button. Also, if you want to learn more about the products we offer at 7X, go ahead and hit the link below and join the team. We'd like to have you on board. We trade daily, live accounts right in front of you. You can see how we do it and become a professional, profitable trader. Now to go ahead and see what's coming up this week. The most important thing we have on the docket, of course, is the Fed. And the Fed, we're thinking, is going to go ahead and raise 25 basis points. We believe it's been priced in. We believe that also the Fed will be somewhat hawkish. However, we do also see the Fed tapering back on its interest rate rises. And why is that? Well, one, the domestic debt, which is over 30 trillion, the higher the rate, the more expensive it becomes to pay that debt or to pay the interest on that debt, which at current levels, if we go to 5% or over 5%, which the Fed is planning to do, we could be looking at paying over $1 trillion in interest on the debt. Now, we take in about 4.6 trillion, so that's paying an awful lot of that towards debt servicing. That is one of the reasons why I think the Fed is going to kind of taper back a little bit in its rhetoric about being very aggressive in raising rates. The second reason is because that it has an effect on the rest of the world. And so having that sovereign debt out there, it's really going to cause some havoc if the dollar increases in price and the Fed uses interest rates to fight inflation. Now, in my opinion, inflation is going to be with us for a long time because we are changing the way we do supply chains in the world. So we're going to be looking at new supply chains being developed over the next 5 to 10 years. It's going to take some time for those to get in place. And during that time, we're going to have spotty supply chain distribution, which means we are probably going to see inflation for quite some time. So with that being the case, until those distribution lines are built, which the United States finds itself in a very good situation, being one, that we have low-cost labor just to the south of us in Mexico. Two, we have good land, which is very needful for production of food sources, which was the reason why farmland is going to go up so much in value, is because we're going to do a lot more farming here in the States. Hence the reason why the owner of Microsoft, Bill Gates, is buying up so much farmland. And next, China, being the situation it's in, is got poor land, and to be self-sustaining, it's going to have to connect with other countries to be sustained because it doesn't have very good land, and it doesn't have wealth throughout its country. It's mostly centralized in urban areas. And its population is starting to decrease rapidly. Its numbers came out and they're about 1.5 billion short in the next coming years. So China has some real problems on its hand. The United States finds itself in a better situation along with France. France has oil next to it, has waterways, it has good land and so forth in different countries in its surrounding area. The UK needs to pick a side to get on quickly before this all goes down and changes. So I still see inflation coming on in the next 5 years at least until we get these supply chains built. But in this case, where we're at now, going a little bit off Keter there, but going to where we're going to be moving now, I believe that markets are poised to make a bullish run. And the reason for that is labor market is still relatively good, although we don't have the statistics of that coming in for a few months because those who have been laid off by these companies like Twitter, Amazon, Google, and so forth, they have these packages and they also continue to get paid over a 3-month period of time. So we won't see those unemployment numbers hit the market until probably around May. So employment's still going to stay somewhat buoyant. And so we're going to still see a pretty even, steady employment market, and we're probably going to see inflation kind of simmer down. We're going to kind of see it maybe drop a little bit more and probably go flat here for a little bit. So that's really what I see things. I see the Fed holding at these rates for a while, but with everything looking forward, the market prices and things looking forward, it kind of gives a bullish run for the market. So I'm expecting that this pullback here in the NASDAQ, let me just blow that up a little bit more so we can see it here. I believe that this pullback is going to pull back and continue long. So we should be looking for something like this, a move down and then a move back up out of here and a swing to the upside, breaking the 200-day moving average. If that happens, our trade is going to be right in here. That's where our trade is going to be for the upside move. Now, if we subsequently break back down into this wedge, well, then we have a whole different scenario, which is going to pull us back. We're going to get short there for the downside move and more than likely the break. So we would get short at this area if we fail and go back into the channel. Now, what constitutes a break back into a channel? When we break back in and we hold that position within the channel, then we look for the little pullback and a continuation to the downside, and that is what would constitute a break back in the channel. Now, once we get down to the bottom of the channel, we'd have a bounce and then a breakout to the downside. So there's lots of areas to get in short to this if it does decide to go to the downside. If it does pull back here and we get a breakout, then we look for a continuation in the upside. So you could pull back in, break out, come back up here to this level, and that would be your entry on the NASDAQ to the upside. So that's the way we're looking at the NASDAQ going forward in the next few days. We're expecting the Fed to be hawkish. We're expecting the 25 basis point hike, but we are expecting that the market is seeing that the end of this aggressive rate hiking is just that, at its end, and we don't see much more, and the market's going to start to price that in. This is the daily of the S&P. Again, I'm expecting a downside move to retest this 200 moving average, and it has broken it, and expecting it to come back out of there and break this channel line here. Now, we have this one that has been with us for a while. It has broken that. I'm looking for the retest now. We talked about this, and it's coming back to retest. We're looking to trade this long after we come back to this zone right here and we see a reversal. It's the same with this. If we break back into this channel, we look for further downside push, which could go quite the distance. And so these are the areas we're looking for to go long or short. This would be the short over here if it breaks back in. This would be a long if it held support and started to break back up, and we look for a continuation to the upside and a break out of this wedge right here that we have formed on the daily chart. That is how we're going to play S&P to the long side. We're expecting it to go long, but if it does go short, we have a short setup which we can play on this, and that would be it, just what I showed you there. This is US 30 or the Dow. If we expect it to go long, we would probably come down to this zone right in here. This looks to be about 33,300, 33,400, right in that range, right in there. If we see a reversal happen in this zone here, then we would look to go long on this. Again, if this breaks this, we're going to stay out of it, but the break would look something like this: a pullback, retest, and a move down. And that would put us down here at about 31,758 is where we look for that support zone to be, right in that area there, if we break to the downside on this. Now, this will move differently than the NASDAQ. The NASDAQ will move much faster than the Dow will, but nonetheless, we would look for a move back down. Probably that would lie as support, and then we would start to see sideways action and then a push higher is how we would view the Dow on this move coming down if it broke down. But again, we're expecting it to come down a little ways. hit this support zone right in there at 33.4, 33.70, somewhere in there, and then bounce off that and move back up to the top side, breaking this downtrend channel right here. Pound dollar, you see that we're still up here at resistance. Again, we're looking for this to maybe move down a little bit, but if we are expecting to go long the market, we would raise up and push out like that. If we're going to go further down, we would look for a range. So we'd look for this to go back down to this zone, probably hold this range right here, and then we'd look for it over time to work up to a bullish momentum to push out like this. So again, we're looking at support around this zone right in here, and it's about the 1.228 zone right in there for a support level. And then if everything goes as we expect it to, this pushes out to the top side. If everything turns to the downside, we take it short. When it breaks there, comes up, retests, and that's where we take our short right there to move down. Okay, so that's how we're looking at pound dollar going into this week. Euro Aussie is another trade that we're in. We're looking for this to possibly range here, but eventually come down and break out to the downside and move down to this support zone right in here. So we kind of view this as a possible head and shoulders, but again, we could have more ranging in here before we break, but we are looking for a break, maybe a little bit more upside and then a rollover and eventually a move to the downside. So we are in this and we are just holding it for a sideways movement. We have taken some profit off, but you could expect this to come here. You could even expect it to come clear up back up into here before it moves to the downside. So there is that possibility. In any case, a break of this support line says that it will have a continuation, a pullback, and a continuation to the downside to our target, which lies right about 1.4895 or 1.49 is where we're looking at for target on Euro Aussie. Dollar yen, we have taken profits. We took profits on this right here when it came up. This has just been moving sideways, really not a lot happening with it. So again, it's coming into channel. I expect one or two things: a false breakout and then back into channel and then downward move, maybe up, down, and then down like that, or just a straight drop down, pull back, and down. One of those two things, scenarios, is what I'm looking at. So I'm looking at if we do have a breakout for it to come in rapidly, and if it comes in rapidly, I'm going to get short this. If it breaks out and holds, that's a different story. I'm not going to get short the pair. I'm going to hold, wait for the pullback, and then I would be long up to a good support resistant level that could be at this level at about 135 and some change, or this level here even as high as 138, 139. But it's one of those levels I'd be looking at if we did break out long. So as of right now, I'm expecting this to go short. But if it doesn't go short, we're going to look at one of those two scenarios to go long, a breakout, pullback, and going long in that direction to the upside to one of those two levels. Bitcoin, we had a trade in it, came up, it hit our target right up in here and pulled back. Now we're setting kind of on top of the channel line. We could see this move further back in before we have a breakout. But again, I am expecting Bitcoin to break out. If everything else breaks out to the top side, Bitcoin is going to do the same. And we can look at a 26,000 target for Bitcoin if it does decide to break out to the top side. But we've had quite a aggressive pullback here. I expect it to go down further before we continue to the top side. If we do decide to come back in the channel, we could see clear to the bottom down here, which is going to put us about 13,000, which is fine. It still meets our target. We talked about that last week about the channel line running up through here and it breaking through the channel, coming back up and going back into the channel. Definitely can do that. So I'm prepared for that. But as of right now, any pullback, I'm looking for a long in Bitcoin. And if we pull back into this zone right down in here, I would look on a reversal to take it long once it broke back out of this channel if it breaks back in. So I'm not going to trade this long until I get a nice solid close here, and then I'll take it long moving on out from there. US 10-year bond yield has broken that channel, but it has come back. It came back to retest it again here. It's kind of stayed elevated since then. So we're just looking for this to peter out here and to then make its move back to the downside. So again, we would be looking for something like this. Down to the 200, about 3.29. And that would be the next target on it. But eventually that swing would complete and come back down to here, which would be looking about 3.1. So again, if markets are going to go up, this is generally going to roll back over and head down. And that's kind of what we're looking for it to do. If it comes back up into this channel, then all bets are off. Gold's going to be a short for sure. And we would definitely look at markets going short as well. But again, we expect it to roll over and move further to the downside. Last up is gold. So I like gold to come down further, definitely down here to about the 1893 mark, and maybe have a pullback, maybe pull down a little bit more, and then start another swing back up to the top side. Again, we're looking at this area over here as support. So right around this zone right here would be where we would look to be turning around and moving to the top side. We'll have to see on that. It's a little bit more aggressive to the downside. But if that does swing, we're looking close to the 2,000 mark for gold to hit. And that would put us back up to those highs over here. This high right in here is where that would put us back at. So we're looking at this being an aggressive move, especially if rates start to drop in the 10-year. This is going to take off to the upside. But if rates do start to go up on the 10-year, gold's going to start to head down, probably down here to the 200. So be careful of that. I'm not trading gold right now in this move. We had this long move on it. I'm looking for a pullback to nestle into a nice long on gold again. But as of right now, I'm not planning to put on any trades concerning gold. Last up is the dollar. We see dollar almost came down and touched this support zone right down in here. It is lifting up. So what we would want dollar to do is lift a little higher, maybe up to this resistance support level. And then we would like to see it roll over and break this channel line, retest, and continue its downward move. Now, we would possibly be looking to put on some positions here. If everything went well and we felt dollar was going to go weaker, we would put on our positions at that level. But if we miss that level, if we miss a turn up here, we would put on our positions right here. Now we have long-term positions still way up here in the dollar, but we're looking to put on some short-term positions. And we haven't been in a short-term position on dollar for quite some time now. We've been letting it go through this consolidation period, and we're looking for it to gain some momentum to a breakout side. We believe this is going to push up, and then it's going to push down and break this support level right here, retest it, and continue down to the downside. Now, if dollar does decide to break up and continue to break up, then we're going to be looking for regions here and possibly even up as high as here, but I really don't think it gets up to 108. I think we kind of hold right up here, about 105 to 104 area, and then we continue its move back down is what I'm expecting. But we'll see how that works out if we do break to the top side. Again, we've had a nice pullback here, and we could have a little bit more of a pullback and then a sell-off in dollar to the downside and break the support. This is a huge support zone right in here. So we're going to watch that to confirm the move that's going to continue down if it breaks and holds below that support level. I want to talk a little bit about the war between Ukraine and Russia. I want to speak a little bit about Russia, the plans, and the Ukraine and the plans they have. Now, Russia, the reason why they want this war, the reason why they want to take over all of Ukraine, they've got control over part of it, but the reason why they want to take control over all of it is because if you look here, Ukraine is this big area here. I'll kind of outline it for you so you can see it. That's Ukraine, and here you have Poland, and Poland's a NATO nation. And so you see that there's not a lot between Russia and NATO. NATO is pretty much in the backyard of Russia. And there's some provinces out here, but beyond that, Russia's pretty much an empty, vast oasis, land oasis, with nothing but land and a lot of it. Now, in order for Russia to protect itself against having NATO in its backyard, it wants to overtake Ukraine. And it has this lower part, which it already has possession of down here, but it wants to take all of it. And believe it or not, they will move into Poland as well. Now, the question is, where does it become a point where Russia would feel a need to use its nuclear arsenal against its enemies? And that's kind of what we're going to discuss here. Now, the populace or the population of Russia is going to be decreasing here, as it is in a lot of countries. It's going to be decreasing. If Russia is going to take Ukraine, they have to do it now. They have enough men to be able to take it now. If they wait, they won't have enough men in the future to overtake Ukraine. Russia is already doomed in 2070 as its populace is going to drop dramatically. And so if they want to build their population, they need to take over these countries, and so that they can gain power and continue as a country with a formidable military might or power. So with that being said, because Putin is concerned about those who surround him, he's generally always wearing a bulletproof vest. And he has eliminated all those, either through jail or through death, who want to challenge him or that have ambitions to lead Russia. And so he's really surrounded himself with a bunch of idiots. And that's why they're having problems winning this war, because he's got, I can't remember the commander, but whoever's in charge of it, he's not doing things right. But what Russia usually does, where they lack in military might, they make up in personnel. And what Russia's going to do is they're probably going to add another 500 men to their army that they already have. Meanwhile, and they want to get Kyiv. They want to take Kyiv, which is the capital of Ukraine, and they want to get their military in there. And if they can take Kyiv, they can probably take the rest of Ukraine. Now, when we had the battle back in 2014, Ukraine and Russia overtook part of it, there wasn't a lot of pushback then. And so it was an easy takeover. Everyone pretty much thought that's the way it was going to be this time. But the people of Ukraine have changed. They've kind of, over the years, achieved their own identity. They don't really want to be a part of the motherland anymore. And this time around, we have allies like Germany and NATO, along with the U.S., that are supplying Ukraine with high-tech military tanks and missile systems. They may be supplying them with F-16s. So we'll see how that goes if tech can beat might. And we're going to see this probably come to a head in May, more than likely, because the ground's frozen now. Russia has had quite a few losses. I think they've lost about 100,000 military men. And the ground's going to thaw out, so spring's going to be muddy. They're not going to move then. But once May comes around, it's going to be fighting time. And by then, Russia should have their 500,000 men there, poorly trained, by the way. But Ukraine would have the might and technology of the Western states. And they would also, there's talk of NATO amassing a troop and going in there and fighting with Ukraine. We will see. Now, the point comes, where does Moscow find it necessary to use a nuclear warhead? Well, there's two good ones, three possible ones. One is that Ukraine attacks Moscow with long-range missiles. Okay? That would provoke a military response using a nuclear response. The second is, if Russia takes Ukraine and it wants to go into Poland, Poland is a NATO nation, it will fight back. And if it begins to attack Russia, that would cause a nuclear response from Russia. The third, which I don't know if it would actually happen or not, would be that we come in an indirect war with Russia by supplying them troops, jets, everything they need. And we're kind of fighting a proxy war with Russia. And if Russia finds itself being attacked or being pushed back, and it really has not the manpower anymore to fight against NATO and the West allies to Ukraine, that could provoke a military response. Those are a nuclear response. Those are the three areas you want to watch for. But trust me on this, Russia wants to take Ukraine. It wants to take Poland. It wants to take Romania. It wants to take Hungary. It wants to take all these states. It would go as far as possible and take all those states. It would go down and take Turkey even. So this is kind of what we're up against. And as Russia begins to take these nations, these countries, it will cause havoc. And the more it takes, the more powerful Russia becomes. And so if we see this happening, hold on to your hats, because Russia could become very powerful. And it's not ran by a conglomerate, it's ran by a single dictator now, Putin himself. And so there's no sideline people making suggestions to Putin. He's running the show kind of like Xi in China. He's running the show. It's a one-man show. So anything can happen in that type of environment. There's no one there to tamper down ambitions or illogical thinking. So anything can happen. And trust me, Russia could use its nuclear arsenal against the Western countries. So something to be very looking at very carefully and watching and keep updated on this. It would have a big effect on markets, a tremendous effect on markets and on oil. So keep an eye on that. But this pretty much wraps things up for this week. Good luck with Wednesday coming on and the Fed rate hike. And we'll see how that pans out, and we'll post the directions we'll trade in after that is released. Take care and good luck this week. You'll need it.